tendencies that we live these. All right, good morning, everybody. Today is a Tuesday, I think. 24th? Yeah, Tuesday, July 24th, 2018. This is your daily Forex trading. That trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. You stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Oops. My name is Wayne. It's really nice to a foreign exchange trader. I'm also apparently sick. Two things. Hi, I'm a trader. I'm sick. So I was sure I was going to do the webinar. That's never in doubt. I just wasn't sure if I would have a voice. So like about an hour ago, I couldn't even talk. So anyways, I should cut back to like only 4 cigars a day, right? Just like Churchill. Yeah, sick and twisted. Anyways, my name is Wayne McDonell. I'm a currency trader, beginning retail Forex trading, and I'm here to share my experience with you, with your overriding goal of helping you put together independently derived trade plans. I want you to be a huge success. I want you to be a hero. You don't have to be my hero, but you should be the hero to your friends, your family, your loved ones, and to yourself. So I'm here to help you become a huge, huge success. I do want to let you know up front that it's going to require ridiculous, sickening work ethic. Besides that, it's easy. I do these sessions 7:30 in the morning, Monday through Friday. If you're benefiting in any way, even just out of entertainment perhaps, from these webinars, please visit TradersWay.com. Show your loyalty and respect by opening up an account there. Start with a demo. Give us an opportunity to fall in love. All right, let's get to the trading. How are you? How are you? Let's go, go, go. So much has happened since yesterday. We'll start with Aussie. Oh, wait, nothing's happened. I guess we were here and then we were here. So what it does show you is the probability has diminished that we break out. Okay? There was a small chance that it would do this, but really what the message was before is that we were going to stay in this range for a certain amount of time. Does anyone remember what we talked about? How long would we stay in this range for? Forever. That's right. Forever and ever and ever and ever and ever and ever. Until it breaks. So one thought was if it was going to try to break, it would be there. But really, what you're seeing is we're even tightening the range from here to here. So whatever. More sideways action is what it looks like. Maybe it comes down in here. The next sort of hope, if you're really using hope as part of your strategy, is the August, you get August moved in July. Okay. But that's that. Taking a look at USD versus kitty cat. Same amazing stuff, right? The one thing that's happened here is traders got out where they were supposed to get out. Big news here. And now what? If you were a bullish swing trader, I'm not sure if we covered this yesterday. Maybe I should have. if you were a bullish swing trader, that's your entry, right? And in particular, for a bull, this is the exact price you want to buy on Monday. In fact, for me, it's Sunday afternoon, right? Cool. If you are a bear this week, your price is supposed to be up here. Okay. Calvin took it right on. It's not a great trade though, and let me explain why. I mean, the one that Calvin took down here. Okay. It's not a great trade, and let me kind of distinguish why. What kind of trend do you see this be? When you look at this, do you say up, do you say down, or do you see sideways? Hey, Lady Cash. Sideways. And what kind of trade are you assuming here on this entry? What kind of market are you assuming? Yeah, you're assuming bullish. So here's what I'm trying to say. Um, you entered a bullish trend trade plan in a neutral market. Okay, you see what I mean? And ideally, you're trend trading in a trend. So I'm not saying it's a bad trade. I'm just saying you should know that when you're making the decision to take it, that you're accepting a little bit more risk. Now, by definition, if you believe the market is sideways, you're going to use the S pivot, which is here, and you're going to use the R pivot, which is here. Okay? So, for example, this could just do this. Okay? But this is all right. It's all right. It's not great. It's fine. I mean, it's a good entry, but it'd be remiss if I didn't point that out, that it's a bullish trade in a neutral market zone. Now, for those that are bears, okay, bearish trend trades would be here. Once again, it's not really trending down either, right? So this is a second one up here. Oops. And that's kind of interesting, isn't it? Because this gets us closer to this area, meaning this is kind of resistancy as well. Okay. If you're aggressive because it's drop as a bear, that's okay too. And that's where you look for that. Okay. And because of the bearish engulfing move here, I mean, that's quite a move, don't you think? So I think it's quite legitimate to say, all right, here's the weekly bearish swing, and here's some sort of resistance. Oops. Okay. I think that's the most logical. And the most aggressive is this one. Okay. Because we know when you're doing your weekly bearish swings, this whole area here is your sell zone. Now, the higher one is probably better. Not better, but the probability of it working would be better. So when I say it's probably better, I mean based on the probability. That, not that I'm indecisive. Because I think this would just be absolutely perfect, right? Okay. Okay, cool. So Calvin risks that, right? I don't think Calvin's trade's bad. I think if you're a bull, why not take a shot? You got the monthly, you got the weekly. Yeah, why not take a shot, right? Yeah, why not? And then probably do it again down here. So keep some powder dry, Calvin. And maybe if you knew this going in, that you're trend trading in a sideways, maybe even bearish market, then maybe this is half the lot size normal, and you put your stop below support. Now support's down here, right? So now you can afford twice the stop. So even if it comes down here and then does this, you're golden. And you can always add, because you're only in half, still can afford half. Maybe then you put the other half in here. Okay, and you end up getting the same amount of risk that you took here, but you're just getting, it's not necessarily risk. You're opening yourself up to the same amount of reward, but stepping in with half the risk. Maybe that's the thing. But that would have to come with the whole understanding that, well, you're a bull and it's not a bad place to be a bull, but there's a pretty reasonable chance it'll come down here. Why? This is a bullish trade plan in a neutral market, and there's nothing, in a neutral market, support is generally the S1, not the M2, right? So you're like, well, I got to take the M2. It's beautiful, beautiful entry, but I'll take half the shot just in case this does happen, and then I'll load the boat later. Okay, it's certainly not a double the powder, shorten the fuse scenario. It's keep half your powder dry. And if that's enough pirate analogy, then good. Arr. All right, so we did this, did this. It seems all right. Been all over you. So let us explain this. If you are a bear, this was the sell zone, and you're heading down here. Clear off. So that is the trade plan. If you're a bear, that's your plan for the week. If you're a bull, this is your plan for the week. So if you're a bear, you're pretty nervous about what's taking place, right? Yeah, Alan, that is not always, but certainly. I prefer pulling the trigger, however, okay? But if you're going to place trades using working orders, I recommend you, all right. I recommend you do some searching, do some looking around the internet. Get yourself an EA like this one called AutoStop by fxautomated.com. So maybe go to fxautomated.com. But this is one that I like to use. There are probably thousands that do something similar. What this does is, if I place a working entry, like, buy this if it hits this price while I'm sleeping. Problem with that is it puts you into the market naked, or you got to put in a pretty complex order, which is parent and child orders. It takes time and it's complicated. If it's complicated, it means you can make mistakes. The easier way is to say, use a EA like this that says, if I have a working order in the market and then price hits it and creates an actual market order, then, so there's an if-then statement to this. So it's essentially, it's still a parent and child. If the market goes in, or if the trade actually gets executed and placed in the market, then put in a stop loss of 25 pips and put in a take profit of 50 pips. No, the EAs, I don't know. I don't turn my computer off. It's funny. No, I don't think, no. No, I don't think that's right. It's funny. You turn your computer off. You just blew my mind. Like, really? You got to save power, right, Chuck? Yeah, well, then get a virtual server. Yeah. I mean, what is it, $7 a month? Anyways, not a big deal. You can get past that. I'm just saying, once your account size is over $1 million, you can get the private server. Excuse me. Anyways, you can change this, of course, and say I want a 50 pip stop, which is probably better for overnight orders. And I like to do 150. So I'm typically entering a swing trade if I'm putting in a working order. You know, it's not like I'm scalping while I'm sleeping, right? So therefore, if I'm swing trading, so right on Monday or something, I say, all right, if it opens up around here, sell. Great. Then typically what I'll do is a 51.50. 50 pips stop because I don't want to lose more than 50 pips. And the reason for that is, I don't mind some noise, right? I want to sell there, for example, right? I don't want to sell really. I'm not really interested in selling there or here or here or here because that changes everything. So my goal is like, all right, I want to sell here. I understand there might be some noise and stuff, but good thing I'm sleeping and not sweating bullets. And my stop should be up here, let's say. It shouldn't be up there. Like, I shouldn't get stopped out, right? It's not that I got unlucky like in this kind of part. It's not like I got unlucky and lost money. The only way for me to lose money on a situation like this is I was just totally wrong, right? Well, I don't mind being totally wrong. I just don't want to lose more than 50 pips being totally wrong. Worse than being wrong is being unlucky. See, I don't want luck in my trading at all, ever. I don't want to have like a 10 pip stop and it does that, right? Or even a 20 pip stop. Oops. And there's some sort of like it gets going and then it does this and then right, and then you get a head and shoulders. I don't want to get unlucky like that. That's like unlucky. So I want my stop to be far enough away to remove luck. I don't want to be so far away that I'm using it as a band-aid to, mask my piss poor entry either, right? A lot of people do that too. Their entries suck so bad that maybe they don't even use stops because they, So anyways, and then the opposite can be true. Sometimes I'll sell here, and all of a sudden there'll be some crazy news, and I get lucky. It works for me, but when you get high velocity combined with volatility, like there's some sort of news event, very often you get this. I know because it's called trending. Trending does this, okay? And I can always get on later, right? But if I'm so lucky where I wake up in the morning and I've made 150 pips, I want to bank that because that's not a typical move. And again, I want to remove luck, okay? So if I've been blessed with 150 pips while I'm sleeping, I'll take it. I'll just take it. I'm like, whoa, 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 whoa. Because that's not part of my plan either, right? Doesn't happen often, but it often happens. Okay? Okay? Yeah, and so interest rate hikes or not, failure to hike and all that kind of stuff, yes, it can have an effect. So that's where I use those OCOs. So whoever asked the question about do I ever enter working orders, like for example, on Friday. So I can do things like this, like, okay, on Friday, let's say we're here. And I think for whatever reason that this is bullish. Okay? Could I do something like, oops, could I do something like on Friday now, not today, right? Throw down a trade to say, yeah, if on Monday we open down here, buy it, yes. And I would then run my OCO. I can do this one. I could then run my OCO and say, okay, 50, 150. Okay, now I'm protected. Okay. So if price comes down, turns this working order, executes it, then I have a stop and a limit placed. Okay. Oops. And about 8 years ago, maybe 10 years ago, I was on Bloomberg television and discussed that exact thing. Every time I place a trade, I have a stop and a limit. Yeah, I prefer over time to build positions. So, I put a trade there, move the stop to break even, put a trade there, move the stop to break even, put the trade there, move the stop to break even, put the trade there, move the stop. And I'm always at 100% available capital. That's what I prefer to do. Wow, I'm running out of energy already. I better speed it up. Just to let you know, I'm sick enough now that my daughter is sick and my wife is sick. So I'm sick enough where I'm making everyone in my household sick. But I'm not, I don't call in sick. We still get our job done. Yeah, it's not cool, but anyways. So yeah, so bulls should be nervous here. Okay, bulls should be nervous here. No, sorry, bears should be nervous here. Bulls took their shot. Okay, it just really depends on how you. So everyone's sort of doing their thing. That's why I'm kind of not interested because it's sideways at this point. If it breaks out, I could always trade it next week, right? What is this? Hell no. That's what was supposed to happen last week. If you were a bear, this was a sell. The next sell was up here, right? Been all over, and it's been all over you. It's a beautiful day. And bulls, if they wanted to. They had that. It's not really a swing trade, but it's a 1, 2, 3 trade, right? This high higher than that high, so you would fit it. Do I go a whole week without trading? It's more common in the summer. Remember, I don't feel like I have to trade all the time every day. That's not my job. Trading and trading, 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 trading. My job is to make money. So if it doesn't look like I'm going to make money, I don't have to do anything. You know what's the worst? And if you've been around long enough, right, you know this to be the case. The worst is opening up your charts on Monday thinking, this is kind of like mediocre. And by Friday, you've wasted about 30 hours of your life and you've lost money. And you're sitting there like, I just lost, let's say, 10,000 bucks, right? Like, I lost 10,000 bucks. I could have just taken my wife and kids to the lake, rented a giant boat, and cruised around for a week and lost 10,000 bucks. Like, I didn't do that and I lost 10,000. Like, and I knew it was mediocre to begin with. Like, shit, right? Right? Like, son of a. So look, if it doesn't look good, don't take it. Yeah. So, and some of these pairs I told you yesterday, right, on Monday, seems like a year ago. And I'm like, it just doesn't look that good, right? Well, there you go. Right? Part of getting paid is not losing money. Okay? Yeah, my pleasure. It's tradable, right? But on a weekly basis, it's not great. On a monthly basis, it's not great. So all you had is basically that Asia fade, right? Didn't we talk about this yesterday? You're just taking the fade. But this happens on a 1-minute chart and a 15-minute chart. This happens to be an hourly chart, but it made a higher high buying the dip, right? Yeah, Raymond says, yeah, debits and stuff. Yeah, so we talked about that. Like, it's a trade. It's fine. It's not great, it just is. Oh yeah, and here's the other example. I talked about this. I don't know if this was fifth version. I guess it was, wasn't it? I said there was two places to buy this and this. That's that, right? They're just trade plans. So notice one of the things I teach you is that you should always have the next two levels in which you would like to trade. Okay. So I say things like, well, here and here, this is the sweet spot. So this would be good or that would be good. This is inside week. So the projection here is if you are a buyer here, right? Or the other way I say it is if that is the bottom for the time period, then the projected top for the time period is here. Okay. So that's not a great trade, but it is a trade. It's amazing how precise that was, right? Because we were here at the time, I believe. Yeah, two levels, Michael. Plan A and Plan B. Okay. So, for example, if the market gave you an entry in here, let's say on a 15-minute chart, these green candles sucked you in. It's okay. You lost money, but it's okay. It was a decent trade. Or if you're waiting on the hourly chart, you didn't quite get a 5-8 cross, you didn't quite get your entry, whatever, then great. So where's the next area you'd like to buy? Well, this whole gray zone is a buy zone, right? Did you get a 5A cross here? No. You were probably very close to pulling the trigger, but you might not have. And then this is the next line, right? If you're basing your trade on this, those are really three opportunities. Look for, did you get a 5A cross here? No. Did you get a 5A cross here? Did you get a 5A cross here? Yeah. So you might be in about here. Okay? But it's always like this level or that level, this level or that level. And it forces you to now wait. So remember, if you see a trade, if you see an opportunity and pull the trigger, you're probably going to lose. Right? You need to be waiting. You need to open your charts and say, oh, well, if in this next certain time period I get a certain thing, then I will trade. But if you open your chart and you're like, oh, look at that 5A cross. Whoa, 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 whoa. You're being reactionary. Therefore, by definition, you don't have a plan. And you're trying to be a professional, but you're trading without a plan. So that makes you an amateur, right? Like, what the hell was that? You're like, oh, well, I saw a 5A cross. So, right? So what? What was your trade plan? Yeah, no. Have a plan, buddy. Right? Come on, plan it out, Bubba. So really, very often, you're really planning out tomorrow's trades, right? Like, see the planning that goes into this stuff, right? Like, this is pretty clear, right? When this was resistance, that was pretty sellable. And if you're able to sell there, this was the target. Okay. Now this can also then get you into plans. So let's say that's the trade for the month. Okay, great. Then on the smaller time frames, let's say instead of the 4 hour, let's say it's 1 hour. If I have a stochastics on this chart, how long does it take the stochastics to kind of go from the top to the bottom? I call that one side. How long will that take on the 1 hour chart? Yeah, probably a day. So I'm thinking, well, how about this? What would you expect to be the high for the day if you were a bear? What time of the day? If you were going to look for a high to sell, what would you just guess? Or what would you want? What time of the day? Market open, can you be more specific? What market? Yeah, how about London open? So now you know what 3 or 4 hour period that you might want to sell. And if you sell, right, so now let's say late Asia, pre-London, the market, the stochastics is high, and price has been rising. What do we call that? Yeah, the Asian fade. I talked about it for half an hour yesterday. Yeah, it's probably the Asian fade. So you're like, okay, so it's rising and I'm a bear. That's good. Some idiot's reacting to that and it's like, oh, it's going up, it's going up. You're like, you want it to go up so you can sell it. Some other guy's just buying it, right? So anyways, you're like, oh, cool. And you're in this 2 or 3 hour period that London's going to open. So you're saying to yourself, well, I'm looking to sell. I'm glad that the oscillator is overbought. And I'm looking to sell the dip at resistance. Remember, if there's no resistance, I don't really care about the oscillator. Now you know your kind of period. And then when you short, you're probably going to be in it all day. So you're looking for things like, selling here, selling here. And you have all these micro plans now. Those are day trades. And then if you drop into a 15-minute chart, how long does it take to make a full stochastic cycle from overbought to oversold? Yeah, just divide 24 hours by 4. Right? So now you can expect this to drop pre-London and then fade up again and then maybe sell late New York. And this move is equal to this move, right? So now you're like, sell London, sell New York, sell London, sell New York, sell London, right? All these little micro trades inside medium trades, whatever the word for that would be, on top of macro trades. So you have one trade where you're like, all right, sell CAD yen for the month of July. Can you believe it? When did I set this up? Non-farm payrolls? No, probably not, huh? Maybe I did. Yeah, this is probably non-farm payrolls right here. Anyways, this is one trade plan. Okay? Yeah, sort of. Faber, the real answer to that is sort of, because I don't blindly enter this trade. So by the time I enter the trade, I'm probably on a 5-minute chart, which means I went from a 4-hour chart, did analysis. Then I went down to a 1-hour chart, did analysis. Then I went down to a 15-minute chart, did analysis. Then went down to a 5-minute chart and did analysis. And I'm going to pull the trigger somewhere in here on a 5-minute chart. Or I pull the trigger in here on a 5-minute chart. So I end up scalping everything. Everything to me is a scalp because I want to have refined entries. The only difference between a trade that I'm trying to get 25 pips on and a trade I'm trying to get 250 pips on, it's not the entry, it's not necessarily the lot size, right? It's the time frame I create the plan on and my expectation for the trade. So I can then trade this again and again and again and again and again. Or I don't hold this for the month of July. Instead, I scalp, make 50 pips, scalp, make 50 pips, scalp, make 50 pips, scalp, make 50 pips, and but I know I have intent because my general plan for the month of July, based on my analysis, is this sucker is going to fall for weeks on end. Day after day after day after day. Now, how do I know that? Because I did my job, I did the analysis, and I made a decision. This means down for a long time. So am I buying dips on this? No. Now, if it does this, then I stop selling. Okay, you see what I mean? But because I did my analysis, now I can just say, all right, I'm selling this sucker at least for the next 4 weeks. I'm a seller of this pair. This is the importance of knowing how to do analysis of multiple time frames. Okay, this is an easy trade. It's easy. I don't know if it's right, but it's easy to do if you know how to plan a trade on a monthly basis. Okay? It's not complicated. I don't know if it's right. I'm not saying it's right. I'm saying it's easy. Right? So anyways, I actually think this is where you're going to run into trouble, but nonetheless, okay, at least it gets this bearish for a long time, okay, and I know where to worry about it. So I already have a trade plan here. Like if it came down to this area and then bounced, once again, I stop selling. Okay, so there's all ways to do it. I can sell and hold for the month. I can sell every, right? I can sell every retracement on a daily basis. So what am I going to do tomorrow? I'm going to look to sell the Asian fade. What am I going to do on Thursday? I'm going to look to sell the Asian fade. What about Friday? I don't know about Friday. We might be down here. But the thing is, I know what I'm going to do tomorrow and the next day. And somebody else is just going through charts looking for trades. I should buy this. I guess I should sell this. Oh, look at the 5-day cross. I guess it's going up now. That does not work. Yeah, Faber, generally, that's what I do. I'm not saying that's the right thing to do. But to me, everything's kind of the same. But the thing is, I'm making decisions on expectations. So the first shot, if I sold here, should I take 50 pips profit? Maybe. But this might have meant something very important. And I'd say, well, you know what? If I got that right, this could go down to, let's say, minimum here, more likely here. If I'm lucky, really, if it breaks out down here. Okay? It's a decision, right? Or you might say, I made this so quickly on a Friday, right? So whoever shorted here, they might take profit, especially if it's a nice day in London. We talked about that too, right? So maybe I should just take my money. Because that might be more than 50 pips. That looks more like 100 pips, right? So you're like, you know what? Give me my 100 pips, bro. It's Friday afternoon. Good enough for the girls I go with, right? And then it opens on Monday here. Okay? What? That's exactly what you would want. That's exactly it. That's candy. Right? It's candy. That is candy. What's your target? So, am I happy with this food? No. I'm going here, bro. Why? That's my weekly trade plan. Weekly trade plan. Up here is my monthly trade plan. Am I aggressive when they both agree with each other? Doesn't mean anything, Calvin. It's just money. Actually, do you want the real answer? What does this mean, guys? What happened on Friday? No, that's not quite true. They took profit here. What happened here? This was actually people selling. Oh my God, you guys are not doing your fundamental analysis? You should spank yourself. I can't spank you for you, but if you worked for me, I'd have to bring you in my office and put you over my knee and spank you. Yeah. Excuse me. Japan it became apparent that Japan is probably going to look to cut back or even stop quantitative easing. What? You need to know this stuff, guys, right? I've been away for a month, man. You need to know this stuff. Right? So if I know, you're supposed to be telling me, like, wait, you've been gone a long time. Let me fill you in. I'm like, oh, cool, bro. Thank you. Come on, get on. Right? So less, how do we say this? Yeah. We got to do this. Demand, supply, quantity, price. Okay? Is this going to work for me? Yeah, okay. All right. So we have quantity of 5, 4, 3, 2, 1. All right. So let's say it's not quite accurate, but let's say because they're adding less supply, they're still adding to supply, but now they're adding less. They're tapering, or I don't think they even announced it. They're just, it's rumors basically. Let's just call it summer rumors. But it's not increasing supply, right? That's factual. So in a way, you could argue the market is treating it like there's less supply, right? So supply went from 3 to 2, okay? Moving this way. Oops. Okay? Let's change this color-wise. We went from this equilibrium point to that equilibrium point. We went from 3 to 2 is kind of the argument. Okay? Then, so if price was at P1, the new equilibrium price, because supply went from S1 to S2, this supply 2 is here. Okay? And therefore, the arrow is this way, right? Price went from price 1 to price 2. Price went up for the Japanese yen. Okay? So when the value of the Japanese yen goes up versus the Canadian dollar, then that means down for this pair. You see what I mean? So I don't know if any of that's true, of course, but it's, call it a summer rumor, call it just part of it. It's one of the reasons why the market moves like that. But if you are a bull on yen pairs and you want all yen pairs to go up because essentially you're a bear on Japanese yen, then you should take a look at that, try to find out what was actually said on Friday. Trump also said a lot of things about currency wars. He on Friday during this period, Trump said that China was manipulating their currency and Europe was manipulating their currency. There's a lot of things going on in there, right? And Japan babbled something about something. So if you're interested in that stuff, then go back and like read it and think about it, ponder it. And how would you explain this to a client? Why should someone give you $1 million to trade with? Because you know this stuff and you're on top of it. And you're like, man, Trump can come out and say one thing and move the market, and you could either lose money, you can make money. Luckily, I'm active. I'm on this 24 hours a day because I love trading. Trading is my passion. right? That's what you need to say to someone, right? Like I said, a billionaire friend of mine was approached by a currency trader before I met him, right? So when I was in Hong Kong doing some business work, he calls me up and he's like, hey, I want to do business with you. I'm like, I'm in Hong Kong. He's like, well, when can you come to Dubai? I'm like, Dubai? I can be there like tomorrow. So I flew from Hong Kong to Dubai, totally unplanned. Sat down with him, and then he was telling me a story. He's like, oh, a currency trader, yeah. He's like, I just talked to this guy, and he's like got this system that's, you know, makes all the decisions, and it's some smart little program. And I'm like, I look at him, I'm like, what? He's like, yeah, it makes all these decisions. I'm like, so you're thinking about giving a currency trader money, and this guy's trying to find a way to get out of doing the work? Why would you want that guy? Like, I'm a currency trader, but I love the work. I mean, I love it. Why would you want a way out of it? You know what I mean? Like, I'm on this. I know this, I know that, I know the other thing. I can predict a lot of things, but here's the thing. When the unpredictable happens, I can react to it because I'm on it. It's not fuzzy logic and some machine is kind of trying to, like, you want to, if you gave me money, you would want to do it because I not only do the work, I love the work. Right? I use TradeTheNews.com. I have used TradeTheNews.com for, I don't know, 12 years or something. Yeah, well, let me tell you something about billionaires, Manny. They never give you any money. That's why they're billionaires. Oh, biggest waste of time ever is talking to a billionaire. Well, let's just put it this way. I flew from Hong Kong to Dubai, and I was back in Hong Kong within 24 hours. So anyways. But it's a super nice person. All right. Who knows? Maybe one day he'll do something. If I'm available, maybe I'll help. All right. So yeah. And you notice this probably wasn't, what did we look at, CAD? It probably wasn't CAD weakness. Somebody said, what is that, oil falling? Well, CAD yen fell on Friday, Kiwi yen fell on Friday, pound yen fell on Friday, USD yen fell on Friday, Aussie yen fell on Friday, Swissie yen fell on Friday. Was this oil falling that created that? Yeah, favored. Maybe you did. Good. Good. Yeah, so this definitely good. Yeah, the worst thing is, to talk him out of using a computer program that he really wanted to do, because then if anything went wrong with me or my trading, he'd be like, well, I knew I should have gone with this. And he'd be quick to fire me. There'd be no respect, right? There'd be no respect. I don't want to take money from someone that doesn't respect me. So if everything goes well, maybe he did give the guy with the stupid computer program a ton of money. And if it works, if he loses a ton, if he loses $30 million, great. Works for me. Then he'll come back and he'll say, you know what? You were right. I'm like, I know I was right. Of course I was right. You don't invest into someone that's trying, you don't hire someone that wants to know how many vacation and sick days they get. Yeah, you should give me money. I hate doing the work though. I'm gonna try everything I possibly can to cut corners. If you want to invest in that, if you change your mind, you should give me 3 reasons why I should consider it. Right? So anyways. Yeah, and I also don't like working with people that are indecisive. So the last thing I need is someone's like, yeah, 30 million there. Oh, if that doesn't work, 30 million there. And if that doesn't work, 30 million over here. I'm like, dude, I don't need that. Right? I don't want to be on your Tinder list. All right. So anyways, boom, 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 boom. This ruins my trade plan from the beginning of the month. Okay, the beginning of the month, that was the trade plan. Okay. You can see here that for some reason I've put a thing to worry about. So you can see, I don't know when I did this, to be honest with you, but I was worried about all of this. Makes sense to me. If I were me, I'd be worried about that. And then there's a monthly pivot. That makes sense to me. And then there's a weekly target here. So this makes a ton of sense to me that if I were me 3 weeks ago, I wouldn't be worried about that price. So if I had bought it down here, which also makes a ton of sense to me, I'd be worried about it here, and especially in the summer. Look how close we got, and then it collapsed. Yeah, well, makes sense, right? Makes sense, especially in the summer. Okay. If we've printed, I'm just looking at the week now. If this is our bottom, okay, I don't know if it will be. If it becomes our bottom, then the projected top is up here, back. So that we'd make a full cycle then. Up, down, back up. Okay, cool. To remind you this is the exact price a monthly swing trader would want to buy. But is it trending? So this is quite predictable, and we probably talked about that, 24 days ago. Okay, but now full circle, right? We started with this conversation. That's a bullish trade plan in a sideways market. So we could just get a situation like this. Okay, and hope the Bank of Japan stuff is just a rumor. Okay, so the rumor had to do with their changing their inflation targets, maybe adjusting their quantitative easing. I don't know. Google it, do your research, make a decision. All right, I think I'm spent. My voice is sore again. I feel like I'm breathing acid or something. Do you really think it's? I don't know, John. Look it up. Right? Spend some time. I've actually downloaded spreadsheets from the Bank of Japan website. I mean, surprise yourself with how, right? Of how amazing you want to be. what would you need to do? Like, do you ever watch the show Billions? I only watch it when I'm on airplanes, but it's this idea, a lot of people like it, right? That you're a big super hedge fund and you have sort of super intelligent data, inside information from satellites or whatever, and that somehow you're smarter than everybody else and you got a for sure thing that you want to dump big money on so you can make big money, right? You want to be a deal maker. Well, think about it this way, like, is the deal maker the guy that's sitting here or the gal that's flipping 15, 20, 30 pips at a time off of, oscillator crosses and London breakouts and all this crap? Or is it someone that is cruising through the Bank of Japan website, downloading spreadsheets and PowerPoint presentations and research data that all the other idiots are not doing? Because the vast majority of people are not doing the work. They're playing video games that they call Forex. So, like, why don't be that person that is like gathering this intelligence that nobody else has? And you're like, you know what? They're misreporting this information. You know what I mean? You see what I mean? You're like, I know this information. I know the Bank of Japan. I've read the data. I've seen the PowerPoint presentations. I didn't get this from the Wall Street Journal or the Financial Times. I didn't read a Reuters press release or talk to some other guy that read a Reuters press release on TV and do what he said. I've seen the data. I've interpreted what it means, and I've made a decision. That makes me the expert in Japanese yen. Yeah, boom. This is going to do this, or that is going to do that. I know this. Okay, that's what you want. Isn't that who you want to be? No, cool. Yeah. But right, yeah. But that's where you're trying to get. Like, some people here would say, no, actually, that's not where I want. Cool. So I'm talking to the part of the audience that says, yeah, you know what, that's what I want. I want to gather intelligence and formulate a strategy, something that I could pitch to a potential investor. Why would they give you the money? Because you've done all the research and you have a real point of view. Okay. Now, not everyone wants that. That's cool. It certainly wouldn't hurt for you to do it, right? Or let's say you don't like the fundamentals at all. Sort of the other thing we talked about today was multiple time frame analysis. So I can say, well, based on my technical analysis, this pair is going to drop for a month. Therefore, if I see weekly trade plans that are also bearish, I have higher confidence in that. When my weekly trade plan confirms my monthly trade plan, boom, I'm all in, right? And then I'm going to look for fades. I'm going to fade retracements because there's going to be enter the trade, down it goes. Take some profit, up it fades, right? Sell it again at the top, down it falls, right? So now you're like, I got my day trades on, I got my weekly trade on, I got my monthly trade on. It's all good, my friend. And I know where the supports are. If I'm bearish, I know if it bounces at these prices, I'm going to get super conservative, maybe book a whole bunch of profits because I know where this could flip. I know where the bulls could get back in. And you're like, wow, Wayne, that's a lot of analysis. Yeah. I know where I want to sell it, and I know where a bull would probably buy it. So those are like take profit points, especially if the market like starts to bounce and consolidate or pop. I know where to take my money. Right? So fall in love with the work. That's what I say. With that being said, I'm going to have to go lay down for the next 5 hours. Oh no, I have to write a business plan. Oh. So anyways, peace on earth. May the pips be with you. May your profits be above average. I love you, babe, but I got to jump. Cheers. Thank you again for being a client to TradersWay. If you're new, please open an account at TradersWay. Please, namaste. I'll see you tomorrow, huh? Cool. Right on. Appreciate that, Johnny boy. All right, I'll upload this to YouTube now.